Okay, welcome to the Swing Trading with Cycles channel. We're going to do our update on precious metals today. We're going to focus on this idea of is silver trying to make a run back to all-time highs? And so to do that, we're going to first talk about the evidence for the 8-year cycle low in gold. That's important because for silver to have a meaningful chance of getting to all-time highs, we're probably going to need the 8-year cycle low in gold behind us. So did we have that happen in September? There's a lot of evidence that suggests that we did. And so we're going to look through that 4 specific pieces of evidence. And then we'll look through, gold, silver, GDX as we usually do, how they look in their weekly, daily, and long-term cycles. It's December 11th. It's the Sunday before the big CPI release and FOMC release, December 22nd, 2022. It's the last FOMC meeting of the year. It's the last CPI release of the year. So the market is really looking towards it because everything kind of hinges on this inflation number, of course. And so what is the evidence for the 8-year cycle low? So the first is the fact that we have a swing low for gold. And that means as long as we are, and this is the gold CFDs, not the futures, right? So just to be clear. So looking at, again, so this is the CFDs, not the futures. So once we crossed above 1729, we have a swing low on the monthly chart. You can see this is our November monthly candle, and this is our December candle. Big green, beautiful candle. So as long as we stay, and just to be clear, I'll draw that line, right? Boom, that's our line, right? So that makes September, right? September would be our 8-year cycle low. And think about that. We're here in December talking about whether or not this is our long-term cycle low. All that to say, if you're talking about a long-term cycle low, the rally should last for many, many, many months. So it's okay if you don't get in on the first month or even the second or the third month. There's still plenty of upside. We're still talking about, right now we're trading below 1,800 on the gold CFDs, right? The all-time high is at 2,000. So, and if we're going to get, closer to 2,100 really. So that's $300 below that. And if we're assuming we're going to get all-time highs off of gold, off of this as well, which would be the assumption, there's still a lot of upside there as well. And so all that to say, it's another just kind of sense of like, don't worry about people saying, oh, you're going to miss the bus, that kind of thing. It's BS, right? So that's our first piece of evidence. And just to be clear, we need to make a quarterly swing low. Like we really want to close December with this quarterly swing low. And so I just flipped it to the quarterly chart here. So this is your Q3 candle. So that's just our September low that we were looking at, right? So we need to cross above 1814, right? And I suspect we're going to get there for sure. It's going to be a question of can we close December above there as well to make this a swing low? That's what we're going to have to see, right? So that would be the next step. But gold in and of itself is looking quite strong. What else do we see that's suggesting that we have our 3-year cycle low in place? Well, it's the Dixie. So the Dixie tends to move inversely to gold, precious metals, and really commodities in general. And we'll just look at the long-term chart here for the Dixie. So the monthly chart. We've been talking about this on this channel. Again, if you're not following on Twitter, definitely take a look for a link in the description. But we've had this furious rally out of the 3-year cycle low for the Dixie. But it may have topped on month 20, which was, you guessed it, September. I mean, look at the September monthly candle. It's pretty green, but we have a big upper wick. And as I always say, it's just a fact. An upper wick is a pullback on a lower time frame, and that's what happened. We pulled back. We consolidated in September. November, wham! We made a new low. Look how we closed below the low for September, decisively. And now, notice we are below the low from November and then the December candle. We are making lower lows on the highest of time frames, on the higher time frames, I should say. We're not making lower lows on the quarterly yet, and we'll look at that real quick. But this raises the potential that September was the 3-year cycle top for the dollar, right? That would work perfectly, that the 3-year cycle top for the dollar coincides with the 8-year cycle low for gold, right? A major top for the dollar, major low for gold, right? And so for the dollar, we're going to want to see December close below 104.636. So right now we're above that. We're at 105 spot 195, 194. We're oscillating. But if we close below that, that makes this candle, this quarterly candle, a swing high. Just like this candle was a swing high, and this candle was a swing high on the quarterly level. And I mean, this is the mother of all swing highs, right? That gives you the potential for some real downside action that's going to last a while, like several quarters. We would we would expect the 3-year cycle low in early 2024. So we would be talking about like, 2 or 3 more candles of downside, something like that, right? Like that's what you could be in store for, right? And these are just approximate. I'm not saying we're going to get all the way down. Although I do think base case, we probably do get down closer to the 80s. It probably doesn't happen in a straight line. Like you could see a world where, we even get a green candle, like a green quarterly candle within the sort of decline. Maybe one that even kind of threatens to make a higher high, right? And maybe that's actually even the Q1 candle, right? Like we get a really strong bounce because you have to be aware we're going to get weekly cycle lows in the process, etc. So that's the dollar. That's your second piece of evidence, just direct stuff. And now just looking at the ratio charts, and we're not going to spend too much time on these, just looking really quickly. I'll just flip over. So first we'll look at miners versus gold. So this is just GDX versus GLD. And you can see that we flip back to the monthly chart. This is the month of September, right? You guessed it. We have a major low on the month of September. It's the same principle, same idea, same thinking. It's a monthly swing low, right? Once we crossed above the high from that month that marked the low, this is telling us that this may be a major bottom in the ratio of gold miners to gold. In a bull market, gold miners rise much faster than gold itself. So that's what we would want to see, and that's what we're starting to see. That said, notice this December candle is starting to get red, and so we're going to want to watch for that. And that's the beauty of having these multiple streams of evidence, that we can look at different things like, oh, if these things start to break down, then that tells us it's more likely that the entire thesis is wrong and we haven't made the 8-year cycle low. So we're going to want to start to see this reverse for sure. And if we look at the gold to silver ratio, that's our last piece of evidence. Again, same kind of idea, monthly chart. In this case, we want this to be going lower, and we crossed below that again in September, right? This is your September candle right here, this red candle. And we have a big swing high there. And in this case, it suggests that we have a pretty long-term cycle here. So this one was 55 months. This one was 63 months. This one was 60 months. And in this case, we're only on month 22, and we have a top on month 19. So if this plays out the way these would, and doesn't necessarily have to, but we could see like just many, many, many months of outperformance for silver versus gold, which again would generally be bullish for precious metals as a whole. So just a lot of pieces of compelling evidence, and it gives us great ways to kind of falsify, right? Like, okay, if we don't see that, then it means this, right? That sort of thing. So those are the pieces of evidence of the potential cycle low being in place. Now, how are things looking before the FOMC meeting? Okay, so we're looking at gold here. Let's start on the daily chart. So we have a high on day 22, and that was a big bearish outside candle. Let's just draw the boundaries because we're actually still inside the range of that candle. That's always important to know when you're just kind of inside the range of one candle. That's like super important to know. So we have this big candle on December 5th, made a new high, then made a new low, and then we just kind of went creepy crawly inside that candle. And now, and this is December 11th, again, Sunday night, we're making a low below the low of Friday. So the bearish interpretation of this would be, this is a lower high, right? Like think about that, right? Like this is, or I should say visualize it, right? Like we did this, this, then this, and then we would do that, and then that, and then that, right? That's the bearish potential. Now, as we just discussed, if we're in a new weekly cycle or new 8-year cycle, which by definition means we're in a new weekly cycle as well, then what will happen here is this will become a false breakdown, right? And this is because this is still really early. It's Sunday night, right? Will come down, reverse back up. This will become a wick, and this will go green. We'll see if that is actually what plays out. This is being recorded on a Sunday night, but so far the top has been on day 22, and this is actually day 27. And that's the thing, right? That's the other thing about this. Gold daily cycles are usually in the 30-ish day range, so like you would expect that you're getting a daily cycle low around day 27 to day 30 to day 33. So it actually lines up the timing, right? Like it's like this is actually happening when you might expect it to. But that's the beautiful thing, is that this gives people a chance to get in. Like that's why you don't have to chase things like, oh, I'm going to miss the boat. Don't worry about that. Like you can see very clear levels here. Like, does it bounce off of 1766 potentially? That's a possibility to get long, right? Do we get a deeper retracement down to like the 1730-ish level, right? And this is the CFDs, not the futures, but you're going to find the same patterns, the same kind of structures on the futures. And on the weekly level, you can see we would need to get below 1766 to make a new weekly low. So that's important to know. Because right now, because of the big doji of a weekly candle we had last week, we're just an inside week right now, and we'd still be above the low from here, that spike down low at 1725. So we're still kind of holding up in this kind of bull flag consolidation on the upper end of the range kind of thing. And again, we talked about the monthly chart still looking relatively bullish. But in terms of the weekly cycle for gold, you would call this 6 week 6 potentially. But at the same time, this is a whole like triple bottom. That's the thing, right? Because if you call this your weekly cycle, yeah, right? Because if this is your weekly cycle low, or excuse me, your 8-year cycle low, then this has to also be your weekly cycle low, which makes this later in the weekly cycle. This is where you start to kind of quibble on like the timing bands, and that's where price action is so important, and that's why price action is so preeminent, right? Again, in this case, we need to hold above 1766, otherwise we're making a new low on the weekly chart, and that's not good. And then below that is this kind of cluster of lows here. And so if we move on to GDX next, and then we'll do our deep dive on silver, we'll kind of close out there, because that's what we want to focus on. Because gold is really just a kind of a proxy for silver in a way. You need gold to be strong for silver to really shine in a way. So GDX, high on day 19. This was Friday. Yikes. That's a bearish outside candle. Makes a new high, makes a new low on the same day, same candle. And that projects to lower prices. We can already see that the metals overnight are trading lower. Now GDX isn't going to get that chance because it doesn't trade all night like a commodity, but it's setting up for something like that. Again, possible opportunity to buy, right? If it holds certain levels. At the same time, this structure is right now not looking so hot. And on the weekly chart, this is the more important thing. The week before last, we made a high, and last week was just an inside week. So that was all of last week. So we're gonna want to see if we break out above or like out of these levels, right? So the range from last week, which is about $30 to $28.24, and the range of the previous week is $30.54 to $27.40. So that's going to be important. Otherwise, week 9 may have been the top. And of course, we have the big catalyst next week, the FOMC, the CPI. That's got to move things, you imagine. But that's what we're watching for. That would be your real bear case, that we're already starting the weekly cycle decline. The last weekly cycle topped out on week 12. And this was a rally of, let's just see percentage-wise. If somehow you bought the Pico bottom, that was already 40% rally. That's nice. It was about 42% rally. So that's interesting. That went 12 weeks, but that was about the same amount of rally that you got from here. So yeah, it's totally possible that we have just kind of plateaued. And on the monthly chart, You can see that ratio chart was going red on the month, and that's because this is red on the month, right? And so we're going to want to watch for this. I mean, this is a very bullish looking formation right now. This is your fly in the ointment with a red month. We're going to want to see that change. And as I always say, going from red to green is very simple. The month opened at 29.73. We want to get above 29.73. We want to get above 29.73 on GDX to get that month red and get green again, right? That's important. And so we'll close out with silver, and we'll look at, we'll do a bit of a deep dive on this one. So just getting a sense of the daily cycle here. So this is a little bit complex. We may have had a daily cycle low here on day 26, and that would make this day 14. Or this is all still one daily cycle and we're on day 40. Again, same kind of notion. We want to watch the price action. At this point, the low from Friday was 22.97-ish. So we want to stay above that. And I think that it wouldn't be the end of the world if we went up below that. I'd say, if anything, we want a pullback to hold right around the $22 level. You know, we maybe break down below that, but we want to recover it pretty quickly. If not, that opens up the $20.50 neighborhood, essentially, right? And if we look at the weekly chart, more importantly, that's the great thing about the multiple time frame analysis. Sometimes one time frame is a little bit murky, but the other is actually quite crystal clear, right? And so this is your weekly chart where the weekly cycle is very clear. Last week was the end of week 14. Yes. So this is week 15 here. The low from last week was $22.03. So we really need to stay above that to prevent it from making a swing high. And that's going to be important. Otherwise, we're still an inside month, or excuse me, an inside week. But just keeping in context, right? The bullish cycle that everyone thinks about is from the 2020 COVID rebound. I'll just zoom in on that, right? So that cycle topped out on week 20. That's just important to see that, right? And you can see we had a few weeks in here where like we kind of did nothing basically, like 1, 2, 3, 4 weeks. And then the real move came in like the last 3 weeks to the top. And so you want to be aware of that, right? Like this is week 14. And I say that in two senses. One, there may be a massive move that comes and it happens pretty suddenly, but even sudden is like relative, because this was still 3 full weeks, right? So if you understand how to read price action, you could have been in on this move and enjoyed it, right? But you also want to make sure that you get out, because I mean, look at this. The party ended very quickly. We consolidated and then wham, right? This was the thing that like the finisher, right? And so you want to make sure that you try to capture as much of this profit as possible, but then you also keep as much of it as possible. And so as we come into week 15, where we're consolidating here so far, maybe we consolidate all week. Maybe we break out later in the week and we see something like that, and then something like that. You want to make sure that you're starting to think about selling, that you're prepared to sell closer to here versus waiting for it to just kind of get, get away from you, right? Your like trigger would be something like that. Like imagine we make a run like that and like that. Excuse me. So like imagine we have like just whoosh, and of course there's wick in here. So things happen, but then you get a candle that does this. Well, you got to get out. And when do you get out? Well, it's quite simple, right? Right there. Right? You can set your stop there, right? Ideally, right? So you don't have to think about it. It's automatic, right? So you ride this, and maybe you ride this, and here's the thing. This is about your risk tolerance, right? You could ride this all the way up, and if you're okay giving all this back, right? Essentially, you're like, okay, well, I just don't, if I break this week's low, then that means the trend is over. You can be more conservative and set that stop at a daily level, right? Where you don't want to make a daily low, but the way things are very volatile, you have false breakdowns, etc. But that's the way you want to be thinking about it as you start to kind of get this move. I mean, Wouldn't this be glorious? We just kind of get to overshoot above 30, but then you see something like this, especially if that happens. So this is week 15, 16, 17, 18, 19. Imagine we have this on week 19. You want to start to be cautious, but at the same time, you don't need to sell until we show real evidence that we're starting to make lower lows. And again, you can calibrate that on the daily or weekly time frame, or even on the hourly time frame, right? If you don't want to give any profits back, sort of thing. If you want, if you're like super nimble per se, and on the monthly, you can see, unlike GDX, for instance, we're still green on the month. The open on this month was $19.10. So that's important, just knowing those levels. Like, okay, that would be a really bad case, right? Where, okay, wow, the decline was so severe that it even started to turn the month green, red. That may not be the end of the day, right? But like, but like, you still want to be kind of aware of that. Like okay, we're still above that level, right? But the more pullback that we get, obviously, the more wick that this creates, and the more likely it is that we're gonna go red. But so far, this structure is still looking very strong, and there's no reason why this couldn't take us, back up to test like around these levels, right? Like 26, 27, 20, and then of course at some point a test of 30. And at this point, we're set up to potentially test 30 within this weekly cycle. I don't think we're going to break out to significantly above 30 in this weekly cycle, but who knows? Silver tends to kind of overshoot. For reference, that weekly cycle that I quoted, we rose about 155%. Like, this increase was 155%, right? And like, let's just just for the hell of it, right? What would that be? So even that is only a 78% increase. That's interesting. So either way, what we're going to see, this could be the cycle that everybody's waiting for. You want to make sure that you're looking at the levels so you're not getting too caught up in the emotion, though. We'll be watching that closely on this channel. But definitely, thank you for watching. And as I said, follow on Twitter. I'll be giving more real-time updates as things happen, because things change very quickly in the markets for sure. Thanks for watching.